Okay, good afternoon or good evening, depending on where you are. I want to welcome everybody to the Making Money Trading Stocks and ETF webinar for the first Friday in February. As it turns out, the month of January was just really an excellent month for the active trend trading system, and also for many of our members who have been just sending me just these absolutely fantastic emails about what's going on and how they're doing with the system to date. Thus far, we've had a couple of really excellent trades, and hopefully we'll be able to do the same as we get prepared for Tesla and NVIDIA's earnings next week. I want to remind everybody that all the materials presented are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication or a promise for future performance. A bit about who I am, what I do. I'm linked up with my research colleague, Mike Traeger, in Dallas, Texas. Mike's a really good student of that. Those of you who've linked into Mike, you know he's a really excellent student of the market history. And so I'm glad he and I started working together back in like 2006, actually it's 2007. It's just after I started trading for a living. Remember, your job is to wait for the best opportunities. Everybody's really excited about the market's been heading south over the last couple of days, and just the initial weakness is showing up that hasn't been around for quite some time, and it's doing like a exploratory type adventure right now. It's pulling back, and remember, our intent is to trade the pullbacks when they do bounce, but at some point the pullbacks will in fact stop working. When that happens, that's usually a pretty good indication that we are getting a turnaround. And the question I hope to answer just real quick in today's session, I know this is a brief session, and we'll go into a little bit more on the next on the final hour, is this pullback different, and if so, why? Hey, I just want to remind everybody that I've highlighted the 5 pillars of active trend trading. Those of you have been working with me for some time, you know what they are. But I wanted to just kind of give you a graphic illustration of those. Number one is the active trend trading system. We focus on what to trade, and we let you know, hey, here's what we're trading: strong growth stocks and our premium ETFs, and that corresponds to, hey, what's this? BABA. And the second pillar is when to enter. And as those of you who have traded with us on this BABA trade, we entered right there on the 23rd of January at about $184.65. We also, then the third pillar is when to exit. Well, we planned 2 exits on this particular trade because it was a pre-earnings trade. And the first exit was there about the 190 level, and the second exit was about 199. We actually got out for about 198 and some change. And so then it went on to do its earnings thing, and then, hey, today fell from the sky, or over the past week, has pulled back down after earnings. Earnings was the morning of this day right here, which would have been, Thursday. And so we were in, out before it really had a time to do this. We did do all 3 strategies and did really well. But that's what the active trend trading pillars that we follow are. The 4th pillar is what strategy we're going to use. In this case, we bought the stock. The 5th aspect of it is what to expect. Our probability of success is about 65%. And so, that does carry with it at about 35% of the time the trade will not work, and if it doesn't work, we fire it, and we keep our stops appropriately set. So the objective of this session today is just timely, actionable intel review at the end of the week. Market preview, stocks, ETF performance, and bonus trades if we have one. We don't have one. I was trying to get one out on JDST, and just never got never had the setup that I was looking for to be able to put out a bonus trade on that. So here's where we're sitting as of today. Many of you are reporting that you're starting off 2018 up. Some people are already up 2 digits for the year on utilizing strategy 1, and some people are up, on strategy 2 and doing quite well with that. And so here's what the market's doing, as if we can see. It has sold off from where it was last week, and as you can see here, about a little bit over 2% down for the for the Dow, a little bit 2% and 2.5% down for the S&P. 2% down on NASDAQ, same, about 2% down on the NASDAQ composite, and about pushing 3% down on the Russell. And again, Russell is now below last year's high. So just keep that in mind. We'll file that away. We may use that information a little bit later. Let's take a real quick look at the individual indexes. And let's start here with not NVDA, although NVDA, if you have been trading with us, you should have gotten the alert on NVDA for both buying the stock and buying the call as in preparation for earnings. SPX, which went out a little bit earlier today. SPX, as you can see, daily chart. It has reached, and the question I was asking myself, are the markets at the end of the leash? And we're getting that snap back. If you've ever seen, I know my uncle used to keep hunting dogs when I was a kid, and unfortunately he would leave them on a leash but on a run, and so they have plenty of room to run. But back in the day, that's the way they would do that kind of thing. And but unfortunately, when the dog would reach the end of his rope or the end of his leash, he would get a violent pull, jerk back, especially if he'd been running to try to grab a hold of somebody. And so, is that what we're seeing here? Very interesting. I think here we were. Let's go. I'm looking for that date right there, the 29th. That was. Yeah, that was Monday. Monday we had a bearish Harami, and then we basically, that was fulfilled to the downside. And again, we are selling off nicely down into the support that we had found at the 2767 level. That would be considered a level of, a bounce zone, if you will, somewhere between 2750 and 2770. Where we'd anticipate something bouncing. Watch the TSI. What's the TSI doing? Right now on the daily chart, it's falling straight out of the sky. What's it doing on a weekly chart? Falling straight out of the sky. How can we play this? Since we're breaking through the 20, that probably sets us up that we're going to basically run into the 50. The 50 will probably be around the 2750 level when it does. And so is that going to be an opportunity to buy the bounce? Or is it going to be the first part of what I call the topping two-step, where basically we get a high top right there. Draw that in there real quick. Draw. So topping two-step, new high. Price comes down, reverses off what would be considered a strong level of support. That bounces back up. However, on this new rally attempt, fails to reach or just comes up really close to the past high, reverses down, breaks down. This is the second step, and that usually sets us up for a more significant turnaround. So this is where I'd be looking at this to go. Although, up until now, the pullbacks have been working. But what makes this one different? I promise you I'd be answering that question, especially in the S&P. Let's get rid of that. Remove that drawing. What makes this different is, one, we're getting larger sell-offs than we've had all the way back. The last time we had sell-offs like this was back in August of last year. Now, August of last year did set us up for a really nice rally, so we'll be watching that. Huge move down on the weekly chart. again, TSI pointing straight down. And here's where I'd be drawing the straight line down from here and saying, okay, if that runs down, it's probably going to put us out to about February 20th when we would expect a reversal, or the TSI would run into support. So that's what's going on with that. NASDAQ. I'll be so glad next week. I have received my new laptop, but I've got to transition everything over to it. So hopefully by next week I'll be up with and utilizing with a lot more memory and a lot more bandwidth, so I don't get hung up in all this kind of stuff. Okay, same on NASDAQ. Now NASDAQ has pulled back to a potential bounce zone just below the 20. However, it's not giving us an indication it's ready to bounce yet. What's TSI doing? TSI is just drilling, down. So so we've got a little flag here. You can highlight the flag by just drawing a trend line across these highs. And that's the initial part of a trend line. So that's the downtrend. Hard sell today. If it breaks through this level, where's its potential likely support? About there. And again, we're looking at a similar type thing with the 50-day moving average moving on up, where it would potentially intersect about there, which is where, what day is that? That is about the 9th, somewhere between the 9th and the 10th of February, which isn't too far away. Next week is my wife's birthday, which I'm very pleased that it's my wife's birthday, but her two sisters, her twin sister and her older sister, will be here actually today and tomorrow, and they'll be staying through part of next week. So I'm kind of glad we're getting this pullback. I will be continuing monitoring for putting out alerts and all that kind of stuff, but I'm going to go light on the webinars next week just so I can be a proper host and also pay the proper attention to my wife and her birthday, because it's a very important. Well, all important. Birthdays are important, but NASDAQ on the weekly, not quite a bearish engulfing, but again, we're seeing a similar type of thing. Harder sell-off than any time in a while. The last hard sell-off was this one back here, and that was when? That was back in December. And just pay attention to it. We can draw the trend line across the top of those, and as long as that trend line remains in effect, we're going to continue pushing lower. Russell, the small cap index, it is selling off into a level of a bounce zone, which I would say would be from about where it's at right now, top of where it's at right now, which is right at the 50-day moving average. However, it still looks like it wants to penetrate that and bounce up. Where would it? So this zone runs down here to about 1532. And so anywhere in there would be very interesting. Stronger level of support would be, of course, here at the 1525, and then it's 1510. What would I be looking to trade on that? We're looking at TNA. Those of you who are early warning alerts, you got an email today where Mike basically just gave a real quick brief on we have no signals as of yet, but who knows? Last year was we had one signal all year long. That is very rare, because in the past where we did all the back testing and also the years that we had done, we'd have somewhere between 3, 4, 5 signals. Last year, again, very rare. So who knows? This may be a high, a year with multiple signals. But Mike was letting everybody know that he's diligently watching and waiting for the signals to take place. So I hope you got that email. So that's what we're looking at here. I want to show you a couple of things just to keep your eye on that I like. J-Dust, I still like J-Dust, but it's right now. It took off nicely. It came and it bounced off the 8-day moving average a couple of days and then reversed up and took off. And so now it's is this, as you can see, the weekly chart, not really a great chart to be looking at. You have to zoom in like over here. I mean, it is a good chart, but it went so high in the past, you just can't see it very well. So excellent, came down into this bounce zone last week, rebounced off of that. So estimation is that, if we break out of here, we may be looking at this, 70 to, 75, 77 level. TSI weekly chart ticking up. That is, for me, that is excellent. That tells me that, hey, it's got a chance to do some rolling, some moving. Where would I want to, where am I interested in? If it pulls back into the 52 area, which is just about the 8-day moving average or slightly above it, that's where I'm going to be interested in going long on J-Dust. And then I would basically put a stop probably just below this large weekly candle, which is down about the 48.50. It may even be tighter than that, but just keep an eye on this one. Let's take a look at Tesla. Tesla earnings next week. We know it's got resistance up at the 60 level. It basically popped up, hit 360 yesterday, pulling back into the moving average today. Which moving average is it going to reverse off of? We were playing a little bit earlier today that it was going to reverse off these levels, about the 345 level. As you can see, didn't happen. And so we'll just continue to watch it. And then we'll, so we are in on a very small position on Tesla with the expectation that we're going to get a nice bounce here. We'll see if we do or not. NVDA, same. Although NVDA is being a little bit kinder to us. Again, NVDA put in a nice little hammer today off the 20. Earnings are coming up on, I think it's Thursday of next week, 2/8, and that's after 2/8, which is after market close. So we'll pay attention to that. Again, I may throw out the JDST as a potential bonus trade. That way that applies to anybody who is an active trend trading member, premium and free newsletter members. So let's take a look. Here's what I'm anticipating. This is one of the reasons why I'm a little bit more interested in the inverse aspect of the gold. Is typically first part of February through midsection of March, you get basically the 40-year pattern is for gold to sell off. And if gold sells off, that takes the miners with it. So this is a potential, doesn't mean it's going to necessarily happen, but this is basically a tendency of what gold does in that area. Over the last 15 years, though, gold has actually gone up from the beginning to the middle of the year. This is the dash line. And then towards the end of February, then sold off, went sideways. But both entities around the June-July timeframe hit that, bottom and then zoom out of there. And this is the move we definitely want to capture in the gold area. Okay, just real quick on NASDAQ. NASDAQ, as we said, normally NASDAQ was doing this type of thing at the beginning of the year, like that. However, this year, what did NASDAQ do? Well, NASDAQ has done one of these, like here. It was up almost 6%, maybe a little bit more. So we'll see how much it comes back. But you could actually come all the way back to here and then reverse. But this is the tendency of NASDAQ towards into the March area is when it tends to catch its bid. Since last year was such a powerful year, what can we expect? Well, one thing we can expect is the potential that this year is going to be more volatile, and that'll be good for us from a possible aspect of both of selling premium on our strategy 3 positions. Russell, same. A little bit flat to start the year, then in the latter part of February takes off, catches a bid, and runs pretty good till July, pulls back towards the October timeframe. A tendency again, then catches a bid in October for its year-end run. Here's where we're sitting as of the end of or basically today for 8, we're up about 7.37%. Strategy 3 is still doing quite well. Strategy 2, doing well. And this is the balance out. If you're a member and you're wondering, well, why isn't this exactly as per the other spreadsheet that we have? What this does, it takes into account and balances it across the 3 sections, all the trading costs and all that kind of stuff. It basically blends it down to get the same number here that the account is up, but it splits some of the cost, and so that's why it's not exactly the same as just a regular spreadsheet. Here's what we've done in the past. 2017 win-loss ratio on both strategy 2.1 and strategy 2. Strategy 2, I'm waiting for some. Well, I was waiting for some setups. I actually have two trades on right now. This slide was made before that happened. We're long Tesla. We're long NVDA for earnings, and we're also long NVDA some shares for earnings. Leaps strategy 3 positions. BABA, we closed out that after earnings. We'll be doing a similar type of trade on we'll be doing a similar type of trade on Tesla as we get towards earnings. Earnings are on the 7th after market closes, and so hold off and then sell that premium. We'll sell the premiums with a high implied volatility, and hopefully sell the call that we did on Tesla for a profit as it hits that day. Okay, SPYs. Again, closed out that. Had some good trading on Wednesday night about how to handle when you have profit in the position and you don't, want to lose it. How to handle that. So bonus trade, waiting for a setup, and no catfish specials. Although if the market continues to sell off like it is, we'll probably get some really nice catfish specials in the very near future. Again, we're targeting for the month of January. Our strategy 2, our objective is to generate $500 to $1,000 per week worth of cash, income. And for the month of January, we did average just a little bit above $500. And so the strategy 3, that's what we did. Updated, talked about the revisions to the go-no-go table to give you a little bit more information. For the premium members, be expecting, I'm working on getting out the charts with this that are going to show your bounce zones to help you plan your trades going forward. That may make its debut not this weekend, but next weekend after my company goes home. Okay, my Tesla trade, I've been trading this really. I could be trading this much better because I'm getting lots of moves on Tesla, but right now I'm down about a little bit over $700 on my Tesla trade. So this lesson in compounding is going to be a lesson, one way or the other. We'll see how we're doing. So, okay. Hey, 2018, it's a year of breakthrough and restoration. I really believe that for many of our members. And from the emails I've been seeing from the members, that is the way it's going for them so far. Here's a way you can contact me, or we also have a presence here on Facebook, on Twitter. There's my email. There's our website. And so I got a couple of questions to ask. Assuming interest rates continue down, don't you anticipate the Russell to continue lagging the indices? Indices. Okay, well, basically, if the interest rates, if they continue to increase the interest rates, you would anticipate the Russell to lag the indexes with the other indices without a doubt. We were thinking that the only thing that we were thinking that possibly could offset that was, of course, be the tax break, which a lot of the corporations out there are taking, passing on some of the things that they're gaining from the tax break. They're passing on to their employees, which is really awesome, which will, pop things up. So let's see, Russell. Dollar. Yeah, if the dollar continues going down, yeah, that potentially could impact the Russell. But one thing we have to remember about the Russell, longer term macro markets, the Russell tends to lead at market turning points. In other words, it'll lead down, and then when the market finally reverses after a correction or even a bear market, the Russell tends to reverse early and lead out of it. So, Barb, not this Saturday, but Saturday after was when we'll do the BAM at 9 o'clock in the morning Pacific. That will be a webinar. The one in March will be live at the Masonic. Michelle and I will be in town for that. So, okay, well, we kept it to, okay, a little bit, about 26 minutes. I got to eliminate some slides here in the future because I want to try to keep this to about 15 to 20 minutes max. For PIM members, stay tuned. Next, we'll do the final hour. And so until Monday after this Monday, not this Monday, but Monday after this Monday, we'll do the Aftermarket Monday. And so aloha, trade well, and prosper, my friends. God bless.